Hi, this is Joanne Musa, and I have some important information to share with you on how you can get double-digit returns on your investment without the risk of the markets. Don't want to keep losing your money to the markets? Stop losing money and start multiplying it. Tired of buy, hold, and pray? You can lose that strategy now with what I'm about to show you. Are you worried about your nest egg? You can stop worrying now. Are you wondering about the risks ahead? You don't have to be. Concerned because you're trusting someone else with your money? You don't have to. There is a better way. You can start getting double-digit returns without the risk of the market. I'm Joanne Musa, the tax lien lady, and I've been investing in tax liens and tax deeds about 8 years now, and I've been training others around the world on how to invest in tax liens and tax deeds. Here's my email address and my websites. I'd like to show you how you can get double-digit profit with tax lien investing and why now is the right time to invest in tax lien certificates. Here's what we're going to cover in this short presentation. I'm going to tell you about tax liens. We're going to go over what a tax lien is and why it's such a great investment. I'll tell you how I got started and the 4 things you need to know to buy tax liens. I'll tell you a little bit about the difference between a tax lien and a tax deed and show you how you can get started now with very little money and no credit, and how you can invest tax-free and let your profit grow even faster. What is a tax lien? Well, municipalities cannot meet their budget without collecting property taxes. So when taxes are left unpaid, the county can sell the taxes to investors. Investors bid for the right to pay the taxes and receive the interest rates that the county would normally charge. This is usually between 8 and 36% per annum. Why invest in tax liens? Well, where else can you get 8, 12, 18, 25, or 36% on your money without the risk of the market? And it's real estate secured. You're in first position to get paid. There are no brokerage fees. And you can start with very little money. And here are some more reasons to invest in tax liens now. You don't need good credit. You don't even need to be a citizen of the U.S. or live in the U.S. You can do it from your computer. You can invest with funds from your IRA. There are more tax liens and tax deeds available now than in the past couple of years. So let me tell you how I got started with tax lien investing. But first, let me tell you why I got started. Well, around 2000 to 2002, the real estate market in New Jersey was taking off like a rocket, and I was trying to buy a home. I knew nothing about real estate and very little bit about investing. I had money to invest, but not enough to purchase real estate. I didn't have the income to qualify for financing for a home in New Jersey. I tried investing in pre-foreclosures and foreclosures, but I did not have the education, the money, the financing, the income, the connections, you name it, I didn't have it, what it takes, what it took to make it work. The market for pre-foreclosures was flooded. Homeowners were receiving scores of letters from investors, and it was easy to refinance then. Foreclosure sales required fast cash, which I didn't have at the time. I realized I didn't have enough cash to buy real estate, but I was curious about tax liens. I read something about tax liens in Robert Kiyosaki's Rich Dad, Poor Dad, and in Robert Allen's Multiple Streams of Income. But I wanted to learn more. But the only book in print at that time that was specifically about tax liens was The 16% Solution by Joel Moskowitz, and the book was already more than 10 years old. It has since been revised and reprinted in 2009. Now there are dozens of books and programs on tax lien investing, but they are not all written by experts. So I started going to tax sales in New Jersey where I lived. I learned by trial and error. Then I met another investor, and we started working together. He asked me to work for him, so I started working for him, and I learned even faster. Being a multimillionaire, he had a lot more money than I did to invest. I hired people to work for me so that we could go to more tax sales. I started training people to do due diligence and bid at the tax sales for me. And meanwhile, I was building my own portfolio of tax liens and later tax deeds. Over the next couple of years, I learned a lot about tax lien investing and about training others to do investing. I started my own website. I noticed there was a need for information on tax lien investing, and I started interviewing other experts around the country on tax lien investing and different aspects of tax lien and tax deed investing. Basically, there are 4 things that you need to know to be a profitable tax lien investor. You need to know what the interest rate is that you're getting on your investment. You need to know what the bidding procedure is in the state or county that you're bidding. You need to know what the redemption period is in the state or the county that you're buying liens or deeds in. And you need to know what the expiration is, or what the life is of the tax lien certificate or redeemable tax deed that you're purchasing. Here are some examples for you from just a few states. In New Jersey, for instance, the maximum interest rate is 18%. The interest rate is bid down and premium can be bid at the tax sale. Redemption period is 2 years, and the life of the tax lien is 20 years. Now, let's contrast that with another state. In Iowa, for example, the interest rate is 2% per month or 24% a year. Ownership interest in the property is bid down, or a random selection process is used. The redemption period is 2 years, and the lien expires in 3 years. So you really have to start foreclosure right away if the lien doesn't redeem. And here is what happens in 2 other popular tax lien states that have online tax sales, Arizona and Florida. In Arizona, the maximum interest rate is 16%. The interest rate is bid down at the tax sale. The redemption period is 3 years. And the tax lien expires after 6 years. In Florida, the maximum interest rate is 18%. The interest rate is bid down at the sale. The redemption period is 2 years. And the lien expires in 7 years. But not all states sell tax liens. Some states are deed states. So what's the difference between a tax lien and a tax deed? Some states will actually sell the property. They don't mess around. They don't sell the taxes on the property. If you're delinquent with your property taxes, they will sell the property. They are known as tax deeds because they are selling the deed to the property. When you purchase a tax lien, you're not purchasing the property. You're purchasing a lien, and you're paying the taxes and putting a lien on the property. But when you purchase a tax deed, you are purchasing the property. You typically need a lot more money for tax deeds than you do for tax liens. Okay, so let's review the tax lien process. First, you purchase the tax lien certificate at the tax sale. Then you need to record the certificate with the county clerk. Now, in some states this is done for you, but in some states you have to do this yourself. Then you pay the subsequent taxes on the property. Now, you don't have to do this in all states, and in some states you actually don't get to pay the subsequent taxes. But in the states that do allow you to pay the subsequent taxes, sometimes you get the maximum rate on your subsequent taxes, and it adds to your profit on your lien. So I suggest you do pay the subsequent taxes if you can. And in fact, one state, Arizona, actually some of the counties in that state force you to pay your subsequent taxes. Then the last thing that you do is collect your principal and interest and penalties when the lien redeems. Or if the lien doesn't redeem, you can foreclose on the property, but that rarely happens. Now let me tell you about a way that you can make more profit faster with a self-directed IRA. There are 4 benefits of investing through a self-directed IRA. The first is that you make compounded interest and tax-deferred profits, which equate to lasting wealth. You can get large tax deductions, protection from creditors, and you can build wealth for future generations. So here's how you can make 2011 the year you change your future. Take 1 year to start building your own profitable tax lien portfolio. Put $5,000 a year into your tax lien portfolio for the next 10 years at an average rate of return of 10%. And if you do this through your IRA or your Roth IRA, in 25 years, you'll have $361,235.31. Now, if you average 15% a year instead of 10% a year, you'll have close to $1 million in 25 years. If you continued to invest $5,000 a year at 15% for the entire 25 years, you'd have over $1 million. Well, I want to thank you for watching this presentation that I put together for you on the benefits of tax lien investing. Again, my name is Joanne Musa. I'm known online as the Tax Lien Lady, and here's my email address and a couple of my websites.